All right. Everyone, welcome to Tax Update for February 2nd, 2024, also known affectionately as Episode 91. My name is John Sheeley. Happy to be here with you today as we get to the first Friday of the season, post-filing season, right? Or post e-file opening, I should say. Dates, you can catch me live this year, May 15th, for the Nevada Society of Enrolled Agents. For next week, I'll list the courses I'm offering for them. I'm the sole speaker for the day. I'll be at Latino Tax Fest June 24th through 27th. I will be at the New York, Connecticut Association of Tax Professionals in Danbury on July 18th. I just booked that today. June 11th and 12th, I will be speaking on artificial intelligence because that's the intelligence I know best. Haha. For CSEA at Super Seminars. Catch that live. Catch that online. Frank Agostino's event is in June. I will be there. There's maybe a conflict with the date because of the Juneteenth holiday this year. So we're going to know shortly what the official dates are for Frank's free barbecue. If you can get to Hackensack, I highly recommend the barbecue and the education. If you're not a subscriber, we welcome you to get unlimited education with us for $52 per month, as long as you would like to get it. If you need your questions answered, a little extra support, we meet 3 times a week during tax season. Purchase the Tax Season Support Program every Friday for 90 minutes. Tuesday, we do a 2-hour program, open call. Email your questions in advance, but come on in, get your answers. You can catch this stuff on replay. It's all recorded. Wednesday nights, we do a special international session with Rita Ryan for an hour. Ellie Jones joins me on Friday. With Rita, we're able to get a lot of quality international education programs, problem solved. We ask that you not ask international questions the other sessions. IRS has released the nationwide forum dates for San Diego, Dallas, Baltimore, Orlando, Chicago. A nice low-cost getaway if you want to do that. Last year, hotel rooms in a couple of sites, specifically Baltimore and San Diego, sold out. San Diego was during the summer. They've moved it to the end this year, so maybe less folks will go. I don't know. Baltimore, they have not 1 hotel, but 3. They have 2 overflow hotels. So this year, I don't think Baltimore will sell out of hotel space. IRS has an upcoming webinar on the Employee Retention Credit on February 8th. I noticed that they have changed the description a little bit. They're focusing on the voluntary disclosure program, and there's a likelihood you're going to learn that the entire ERTC program is going to close on January 31st. So if the applications aren't in, don't bother. And hopefully they're taking that money and reassigning it to the child tax credit and some of these other programs that they're doing. So hopefully, in addition to ending some of the ERTC issues, the money will get redeployed. But this program is going to focus on those things. It's delivered by IRS personnel, and it's free. I highly recommend it. I'm going to be there. It'll be interesting to hear what the IRS personnel have to say on these issues currently. I'm still lost on how I'm going to deliver the information to you in the way that the IRS is now presenting it. As we've mentioned before, they did away with the COVID operations, it looks like. They are not reporting numbers. They are not updating it. The last numbers were early December. They do have these status update pages, which on the one hand are more useful because at least we know how far back they are if they are in fact getting work done in the order that it comes in. So instead of posting the new one each week, now I'm going to post the 2 weeks as a comparative, and maybe that's going to help us out. I don't know. You can see here the one change that's going on for original 1040 returns. The IRS is processing things submitted during January right now. So anything submitted by January 1st should be fully processed. Well, we sent in a whole slew of paper returns in December. I don't see it on the transcripts where they're processed yet. So let's see how accurate this is. The amended returns, though, being stuck in July still. That's been that way since at least December. That's a little disturbing. We have people asking us about their amended 1040s. And this has been our answer. The one positive thing here, they can go to the website themselves and take a look at it. right? Don't have to harass me. Business returns, they have not updated. 1120s have not moved. 941s, excluding ERC, amended returns have not moved on the 941X. They are processing 941 originals received during January. 1041 returns, no additional processing. I do find it a bit disturbing that how far back they are, including with the amended returns there. As far as other programs, nothing appears to be moving at the IRS. It's worth mentioning maybe that letters and notices are still stuck in August. And as I mentioned, we haven't received updated numbers since December 9th, 2023. The IRS in the past 2 years has announced we are now current, we are now processing what's coming in. They didn't say that yet this year. I have no idea how many of those 600,000 returns remain in error correction. No idea. That 941X number, we know they haven't been processing them. That number's got to be higher. That number's from December 9th. So that number is almost 2 months old during the moratorium. No idea what they're doing. All right. Big focus today is going to be the Tax Relief for American Families and Workers Act. This is not yet a law. I was going to give you the little guy, a little paper bill. I'm only a bill. I'm sitting here on Capitol Hill. So we've passed Congress. It's passed the House without amendment. It has not been through the Senate yet. It is believed the Senate will sign. It will get through the Senate, and the president will sign it. But right now, we don't know. All right. So the House passed it the other night. 357 to 70. Pretty good, right? They say it's bipartisan. Both sides are agreeing. That's a pretty good vote. Couple of issues. Moderate Republicans in high tax states, hello, New York, wanted an expanded SALT deduction. Well, we've wanted that for a while. We've wanted it completely reinstated. So Speaker Johnson agreed to hold a separate vote next week on a bill which will double the $10,000 SALT cap for joint filers to $20,000. I looked it up. It's House Resolution 7160. It's scheduled for a vote. There's no write-up on it. There's no other information. SALT Marriage Penalty Elimination Act. You can keep checking. My observations. First, he just promised them a vote. If they had any real power, they would have said, we're holding up the passage of the tax package. We're going to hold up the passage of last year's bipartisan tax bill. We still don't have a budget, right? We're going to hold all of this up until you give us what we want. Well, that isn't what happened. They caved in and they gave them an election. They gave them a vote. A vote is on the schedule. So they're not going to hold up the main bill here. It doesn't differ from the Senate version, at least yet. Hopefully it's going to pass. Now, there's a group called the House Freedom Caucus. They oppose expansion of the child tax credit. Now, forgive these two comments. They are not mine. They feel that it discourages Americans from working and rewards illegal immigrants. So these are the two stated reasons why they are opposed to it. And do they have enough votes to topple over the passage? Maybe. So what does the House version include? The passed version includes the immediate expensing of research and development, something the Republicans have wanted. It includes bonus depreciation not phasing out, but staying at 100% for 2023, 2024, and 2025. And bonus will expire along with Tax Cut and Job Act. Repeal of the 163J interest expense limitation. Those three things are what the Republicans have wanted in a tax bill for the last 18 months, 2 years maybe. They got all three. The Democrats have wanted an enhanced child tax credit. They have that, but they don't have. The Democrats' idea of enhanced was $3,000, age 17, and a monthly advance payment because that could count as a transfer of payments and raise household income. All important points on the Democratic planks in their platform. All they've gotten is the additional refundable credit portion. We have provisions on affordable housing, additional tax credits for low-income housing credits, something the Democrats have wanted. And there was a change to how disaster assistance for impacted communities will work on the tax return. Not too much information on that yet. This wasn't something either side was espousing as being needed, so it really wasn't talked a lot. As you know, most bills, if we're going to save money, we have to spend. We have to show where it's coming from. How are we going to pay for all of this? They've modified the cutoff date to be January 31st, 2024. So all the money they're not paying out for claims that aren't submitted yet will be reallocated over towards these credits, these tax reductions. They also think increased enforcement against ERTC promoters and other money that they are able to retain from these programs, either clawback of previously paid credits or money they are able to penalize the promoters will go here. So this program has moved over to the Senate now for a vote. John Thune is the minority whip, right? It's a democratically controlled chamber. He reiterated on Thursday, Senate Republicans want changes. Republicans are having heartburn, his words, over a delinking of work requirements. We're going to talk about that, and that's either a misunderstanding on his part or a twisting of reality. The bill can't pass without an opportunity for amendments. Now, this, of course, is a problem. If they make amendments from the floor, they will have a version. Their version of the bill will differ from the House's version, and it needs to get worked out in committee. As you know from watching, I'm just a bill. I'm only a bill. All right. Majority Leader Schumer supports the bill, and he is working with Senate Finance Committee Chairman Ron Wyden to pass the bill quickly. Now, will Schumer try to get an agreement to move the bill through the Senate? I would think so. He'll cut deals. Will he attach it to the yet unfinalized spending package? Maybe, right? We still don't have a budget. We don't have those 12 bills, those 12 passed resolutions to fund the government. Senate is slated to go into recess February 9th. That's a problem. They really hopefully get this done before then. I want to go over some of the key provisions of this credit, and I want to reiterate of this law. I want to reiterate it is not yet a law. It is still proposed. It has not been voted on. We can talk about this because it's not a law yet. We don't offer CE in this program. I'm actually taking a class tomorrow where I think they're offering CE on this, and I sent them an email and said, I don't know that you can do that, but me and my big mouth, right? I'll probably get uninvited from class. All right, we want to increase access to the child tax credit. We're going to have increases to the rephasable portion in 23, 24, 25. Increased in phased increases into the refundable portion. Forgive me. Now, right now, the Democrats call it a penalty for large families, but the credit phases out, right? You only can get so much for so many children, and they want to take that away. So if you have 8 children, you're going to see a larger refundable credit. They now want to institute a 1-year look back. So this is going to give you flexibility to use your current year income or your prior year income to calculate the child tax credits during 2024 and 2025, until the end of the Tax Cut and Job Act. This is what the Democrats are calling discouraging work, is the fact that you can compute the credit one way or the other. Again, we don't have anything to drill down on. Are they saying I can go to work every other year because I'll get the credit in 24 even if I don't work? I don't know. This piece of legislation, though, has appeared 6 other times in the past 15 years and just not passed. So we'll see. And then after 2024, the credit will be adjusted for inflation. That's a common theme, is that they've started indexing this stuff. So on the business-related side, otherwise known as the Republican side, R&D expensing for businesses is now immediate, regardless of the size of the company. Still has to be U.S.-based R&D investments. Now, I had this discussion on one of the coaching groups where someone said, yeah, but my guy is paying for all of this money offshore. Well, guess what? R&D costs offshore apparently are still not going to be currently deductible, only U.S.-based work. And this ties in with the treatment of Taiwan we're going to talk about in a minute, right? And all of the energy-related credits from the Inflation Reduction Act, all of which are encouraging development and science here in the United States. No limitation on the deductibility of business interest. Bonus depreciation remains at one. We're going to restore it to 100% for 2023. It's supposed to be 80%. And then for 2024, 2025, it will stay at 100%. And then as far as Taiwan, we're going to have relief from double taxation. We are going to allow a tax credit for tax paid to Taiwan. Didn't previously have this. And we are going to, this is a decoupling of the one China rule, which the United States is pretty uniformly followed, whether it was civil, criminal, or tax, right? So they've also given Congress, and the Congress has given the Department of State authority to negotiate a tax treaty with Taiwan. So the times they are changing. The communities struck by disaster bill will raise the Section 179 deduction to $1.29 million. It has not been adjusted since 2017. 1099 NEC, the saga that won't die. This bill would adjust it to $1,000 for 2024 and then index it. Now, the $600 limit for the 1099 NEC was introduced in 1954 when we added 1099 reporting for business payments into the tax code. So Ellie ran that number for me today, and that's about $6,600 today. So the $1,000 is still a rather low bar. I'll remind you that the IRS only is able to act on 15% of the cases automated underreporter identifies. So there is an argument here that says we are overloading them with information. However, we gave them $80 billion, which hopefully will be used to better hire other employees and to further do these enforcements. Disaster tax relief covering recent hurricanes, flooding, wildfires, and specifically mentioned the Ohio rail disaster. So all of these are going to get better treatment with respect to the treatment of losses. And I'm not going to bother you with this. I don't know that any of us are actively involved with some of these credits, but the Employee Retention Credit Program would come to an end on January 31st. They estimate they will save $70 billion by accelerating the deadline for these. They keep calling them backdated claims, but they mean amended returns, right? They're going to end the statute, close the window. Now, what's interesting, I couldn't find the number, but I thought Frank Agostino told me a couple of times that the entire General Accounting Office estimate of the cost of the employee retention credit was $80 billion. Back when they did the CARES Act, that was the estimated cost. So they're going to save that much alone. Outrageous where that went. We will be running a class on this on 5 p.m. the first Friday after this bill passes. If the bill passes this weekend, it'll be next Friday. Anytime next week, it'll be next Friday. All right. Commissioner Werfel says, file your taxes now. Taxpayers should not wait for Congress to enact the changes. He specifically mentioned the child tax credit. If the bill gets signed into law, the IRS is planning to be able to automatically adjust all the affected returns. Well, without the taxpayer having any extra steps. Well, how does that impact us? This is what I'm concerned about. Clients are going to wait or not wait, right? That's the very nature of people. But I think the phone's going to ring off the hook. As soon as this passes, I'm going to have a text out and an email out to everybody. Why? I don't want my phone blowing up. We're going to be proactive about it. Out goes the group text through Texto, and out goes the emails through MailChimp. I want to avoid calls. I'll give scripts to everybody up front so they can answer the big questions, drive them to the website to get answers, drive them to our emails to get answers. I think there's going to be a lot of follow-up, though, because even if people listen to us and follow the rules, when we tell them, yes, your additional credit will come, the IRS says 60 days after the date you filed. Oh, okay, great. On day 60, my money isn't here yet. Well, I think that we're also going to run into the issue of recalculating returns, because the client who should not get any money that calls up and keeps insisting, yeah, I called the IRS. They said you have to call, but I'm getting more money. That type of nonsense. So I want the ability to pull transcripts in these people. We are going to, our office, we are going to start taking Form 8821 and 2848 again from everyone this year. Why? So that if we have to call for them, we have to get transcripts, we will be able to do so. I hate this, but we have to do it. Chief counsel. We don't have a chief counsel. Position has been vacant since the start of the Biden administration. President Biden's previous nominee, Marjorie Rawlinson, is still a nominee. So the Senate did their thing, and they have advanced her name to nomination for a full vote. So they had a committee vote of 16-11 in favor of moving her along. The Senate failed to advance her nomination last year. They didn't act before the end of the year, and they went on one of those recesses. So hopefully they don't have that happen this year. TIGTA study out. There's a copy in the portal on the IRS, on the IRA. The IRA meaning the Inflation Reduction Act spending. I hate that they keep calling it the IRA. I get so confused. So this TIGTA report is a quarterly report that comes out now, quarterly snapshot they're calling it. If you remember, the Republican House, Republican Ways and Means, I think specifically, asked Treasury to provide updates on how that money is being spent. They don't want those 87,000 armed guys showing up. So the Treasury Secretary apparently has given this to the TIGTA, Treasury Inspector General for Tax Administration, and they're doing a quarterly report. It's not that in-depth, but it does give us a whole bunch of information. So copy of the report is in the portal is in the folder for you, the downloads. So as of September 30th, they had spent 4.5% of their money. $1.4 billion on employee compensation. They have more employees. $1.2 billion for contractors, advisories, assistants. White House and Congress, though, have previously agreed to cut $20 billion of the $80 billion. So that 4.5% is on the $78 billion, not on the reduction on the $58 billion. So that's interesting. So for those of you that like to look at stuff graphically and learn graphically, this is I hate when they do this, when they put two bars on one line, right? So we can see graphically on enforcement, they were allocated $44.2 billion. They spent that little bitty piece down there, right? So they were allocated all of this, and they spent that little smidge, right? So, but you can see that they did spend a great more deal on operations support, getting the place running. This is the IRS's projected growth through 2031. You can see that they expect to have total headcount of 105,000 from 79,000 when the Inflation Reduction Act was passed, which gave them this amount of money. They would like to see a 20-ish% increase in people answering the phone, 25% increase in enforcement, 50% increase in operations support. And then they have this new thing, 1,810 employees they're hiring to work in clean energy just to administer all of those credits. Now, this is the thing that I found most interesting. I put this up on social media. I got a couple requests about it. So this is a chart. TIGTA is showing the current staffing level in October 3rd, 2023, but then showing what their hiring target was, expected attrition, and how many people they think they're going to have at the end of fiscal 24. The net increase on the right. Revenue officers, a net increase of about 8.5%, right? 265 at the end over the 2008 61. I'll drop down from it to special agents, 25% increase. These are the guys that do carry guns, right? Look in the middle, though, at revenue agents. I had to go over these numbers twice. Current staffing level, 8,559. Hiring target, 5,800 with 1,100 retiring. Their staffing goal is 13,263, a 55% increase in the number of revenue agents. I don't know if this is as a taxpayer, I guess this is good. As a person, a practitioner, I'm a little scared because that means that there's greater than a 1 in 2 chance that the person who does your audit, hi, I'm new here, right? So could be interesting. Those of you looking to retire, right? This figure, along with a number of other things, is in the TIGTA audit, the TIGTA report that we posted for you. Bunch of things going on at the IRS. I indicated this week they're going to release final regulations, finally, on Killer B transactions. So Killer B transactions, short version, are a B-type reorganization, a triangular reorganization. And what it allows the company to do is basically buy itself out. And if used in a way involving a foreign subsidiary, you end up repatriating your foreign subsidiary at no tax, with no tax. Now, whether that's intentional or not, doesn't matter. It works out that way. So they're looking to close that loophole up. Notices in 2014 and 2016 severely limited the ability to do this. So I don't think anybody in the right mind would touch it with a foreign entity. But there are temporary regulations out there that should not differ significantly from the final regulations. So keep that in mind. State of Rhode Island, the state's so small, they once got a request for proposal to carpet the whole place. So parts of our Rhode Island, specifically Providence County, have been granted an extension due to the storms they had back in September, ahead of the September 15th deadline. So I would think that if I could have gotten my returns done by then, I would have. But if you've missed any, here you go. Anything due between September 10th and June 17th is now due June 17th. TAC is Taxpayer Assistance Center. Those are the walk-in centers. I have to tell you, it always amazes me when I'm in New York City. And you can tell where the TAC is at 290 Broadway because they have the steel grates up where people have lined up around the building. But there are 250 TACs that are going to offer extended hours during tax season. And they do this most years outside of COVID. This will run through Tuesday, April 16th. Taxpayers can call this toll-free number to make an appointment, or they can just walk into an open center. Most centers are open Monday through Friday, 8:30 to 4:30. Some Saturday hours in some locations. Now, in past years, they've announced on this Saturday, TACs are open to help you. Call and make an appointment, bring these documents, whatever it is. So I have not seen what Saturdays they're open yet. I went and looked at a couple of local centers here. I don't see any Saturdays open, but you might want to watch for that if you have a client who isn't smart enough to work remotely and, steal time from their employer during the week. Why, you'll be able to send them in on a Saturday. I included this information because it's interesting to me. You may recall that ProPublica got a leak of IRS data a few years ago. And this is how we heard that Peter Thiel, the founder of PayPal and a couple of other organizations, early investor in Facebook, he had $5 billion, billion with a B, in his Roth IRA. And legend has it he got there by having a self-directed IRA with $1,700 of PayPal stock in it, which when he sold it was a gazillion dollars, as far as Gump would say. And he never took it out, has continued to use that as his primary investment vehicle. Bright man. So, but of course, we found out where all their balances were when this contractor leaked all the 5498 data for people like Warren Buffett and some of these other folks. So he got 5 years in jail for this. And of course, Mark Dabrowski would remind you these guys pick their cases. So, of course, they have a great success rate. And they also announce things like that to help people remember to behave. And that's what they're looking to have here, is federal employees behaving. Charles Littlejohn, age 38, from the D.C. area, disclosed information from thousands of tax returns illegally, abused his position. He accessed the IRS database and got tax returns of a high-ranking official, public official A, well, we can all guess who that was, and related entities of that person. He used broad enough parameters and private websites to bypass IRS detection. He knew how to steal. He saved the stolen data on personal devices like an iPod. That could be a typo. He means an iPad. Between August and October of 2019, the information went to news organization One, which I think is ProPublica, and this resulted in a series of articles about the tax returns. November of 2020, the leaked information of thousands of wealthy individuals went out to another organization, which led to nearly 50 articles on that. It's terrible. So TIGTA looks into it. They took a guilty plea from the guy back in October, and the IRS or Treasury is highlighting that this case highlights the critical importance of safeguarding data. So I found this website where I can see someone is keeping track of updates to the Internal Revenue Manual, which is amazing. So within the Internal Revenue Manual is Chapter 35. Chapter 35 is also called the Chief Counsel Directive Manual. So all the stuff that comes to the Chief Counsel's office is codified. Now, they revised Section 35.4.4 to reflect information on third-party contacts. Section 1206 of the Taxpayer First Act of 2019 made this change. It now provides that IRS officers and employees may not contact a third party regarding determination and collection of tax liability unless the taxpayer is first provided with advance notice. And the advance notice needs to meet certain specifications. The notice needs to identify the period. It can't exceed 1 year from now. And you have to give me at least 45 days notice of this. So quite interesting. I'm going to try and collect debt. Let me tell you who I'm going to call. Well, it's keeping within the spirit of the Taxpayer First Act, so that's okay. For those of you who use your IRS mailbox, your secure object repository, isn't this great to find out today that it will be down tomorrow? I hope you're not calling for transcripts. Maintenance is scheduled from 12:30 to 5 Eastern time tomorrow, and then 8 to 9 a.m. 8 a.m. to 9 p.m. on Tuesday. On the 25th. So we expect they won't be available during this time, and this was previously communicated. They previously communicated about maintenance on February 10th. They will not be doing February 10th maintenance, but they will be doing it on the 3rd and the 25th. Commissioner Werfel has been out doing the talk, and mostly he was talking to the Senate Finance Committee this week about the employee retention credit. I'm not going to bore you with this stuff, but mostly it is a, hey, here's all the things we're doing. And I've mentioned this either today or in other places, but they're hoping to get the bad actors, get people to repay their money. They're going to use Inflation Reduction Act money to go after these folks. All right. 3,000 new compliance letters are being sent out. I haven't seen one yet. I'm very interested. They disallowed 21,000 claims from businesses that didn't exist during COVID or didn't have any W-2 wages during COVID. So that's super cool that they're doing low-hanging fruit type stuff. All right. The Werfel was asking the Treasury and IRS to explore legislative options related to the ERC. In other words, can they pass a different law? Can they do something to claw back money? Now, to resume, they think they're going to complete amending the paper returns in 4 months. They're using new risk analysis strategy and new protection measures. They're going to be in place first before they start doing this. And like I said, I think some of these letters are coming from that. Right? We got some of the 20,000 letters where it said, you only issued this many W-2s without even auditing you. We know your ERTC is wrong, right? Start paying us back. So they're doing those things now. If you want to be an acceptance agent, there's been a freeze on the program since early COVID. They have now reopened the application process. If you would like to be an acceptance agent, the link is in the resources tab, the resources page that we gave you as a handout. You can go and register now and become a certifying acceptance agent. Thank you all for joining us today. Great turnout. We'll be here every Friday with exciting new information. Next Friday or the Friday after, I suspect we will be doing a special program on the changes in the 2024 Tax Act. If you need anything in the meantime, let us know, everybody.